How to make $1 million. You've probably heard the term before of doubling your money each time so as to make $1 million. Maybe starting off with $5,000 and getting a 30% return on it until you make it to $1 million. Either way, $1 million starts with income and receiving lots of money. Then how about I tell you about the single most reliable and greatest trading strategy in the world. Introducing moving averages. And now, the application that will become your best friend, T2000. Now don't get overwhelmed. This trading strategy is by far the easiest in the market and the most profitable when used right. By the end of the video, you'll be a master at it. So remember to like, subscribe, and comment throughout for more videos like this. And I will cover what are moving averages and how to use them throughout the video. Now, what are moving averages? There are four. The moving average of 20, 40, 100, and 200. Four I use. Now, what are moving averages? Moving averages are basically zones for the stock market. The moving average of 20 moves the fastest and is used more for short term. Moving average of 40 is also very fast, but it's second on the list and is also used for short term. The moving average of 100 is slower and used more for swings and moves that may take weeks to fulfill. The moving average of 200 is the slowest to use, and it is used for big moves only. Now, how to use them. When a stock breaks the moving average of 20, if below and is moving upwards, it is a good chance that it will keep moving up. But when a stock breaks both the moving average of 20 and 40 as it goes up, it is a 90 to 95% chance it'll explode upwards, bringing in thousands of percents in profits and gains, especially when the moving averages of 20 and 40 cross after or look like they're going to cross and the stock simultaneously breaks upwards. This is when you must buy a call and enter and let the stock do the rest. Usually, the stock will go up 1 to 3 days with this strategy in so-called jumps. Jumps are just what they look like. A stock jumps the next day to a higher price and can continue to do this for days. Now, what do the moving averages of 100 and 200 have to do with all of this? Well, put simply, they're used to track where the stock will reach. For example, if the stock breaks the moving average of 20 and 40, it will most likely reach the moving averages of 100 and 200, which is why they are slower zones, since the stock usually breaks the moving average of 20 and 40 first and then proceeds to reach the moving averages or MAs of 100 and 200. The moving averages of 100 and 200 can become your best friends as indicators of where the stock is going to reach and where you should sell. Always buying low and selling high. Now, what do you do after a stock reaches it all? You must wait until it goes back down or the moving averages reach it and make ways for new zones and prices. Now, how does it work on the downside? Exactly the same. As you can see, SPY was at the top and suddenly broke both the moving averages of 20 and 40, but downwards, and came all the way down from $455 to $436, a near 20-point drop. And if less risky, you want to play it more safe, then you could have sold at 445 and still gotten a crazy amount of profit from it. Now, let's look at some examples so you can learn it better. Starting off with IWM. IWM, as you can see, had a moving average of 20 and 40 cross. And then it broke the moving average of 20 and 40 downwards. That is a 95% chance of a put since it broke it downwards. Now, first jump, as you can see, it happened. It was perfect. Now, second jump. As you can see, then it breaks the moving average of 100 right before doing its second jump. The put should be from here to here. But after it breaks the moving average of 100, you buy another put and you wait until the moving average of 200. That is how you trade in this strategy. 194 to 189.67. That is a 5-point put. Incredible profits can be made from that. Now, another example. The moving averages of 20 and 40 cross again. But now, IWM, the stock, breaks it upwards. When a stock breaks the moving average of 20 and 40, upwards or downwards, wherever the trend may be, it is a 95% chance to keep going. And this is what happens. It breaks moving average of 20 and 40, and then it goes all the way up from 183 to 190. Then it breaks moving average of 100, and then again you wait for the moving average of 200, and there you wait to 192. It went from 184 to 192. Now, of course, it didn't reach the moving average of 200 there, but it stayed in the zone, 191. It's a perfect amount of profits, 184 to 191. That is 5 points. You made your day. Next example, Tesla. Tesla, same thing happened. Moving average of 20 and 40 cross, and Tesla breaks it downwards. Now, what does Tesla do? It drops. It drops from $265 to $258. It breaks the zone of 200 and it drops all the way down to 218. But it's okay. You didn't know. You didn't want to risk it. You didn't know what the next zone was. That's perfect. Then again, Tesla starts moving upwards and breaks the moving average of 20 and 40 right after they cross upwards, and it goes from $230 to $260. First, it reaches the moving average of 100, then it reaches the moving average of 200. Using this strategy, Tesla went from $230 to $260, a 30-point uptrend. 30 points. That's equivalent to making $10,000 in a $500 contract or even more. Next example, Netflix. Netflix, same strategy, broke the moving average of 20 and 40 downwards. As you can see, it broke it downwards, and it went from 436 to 404. 30-point deficit, an incredible put. But of course, if you don't want to get into the put, since the moving average of 200 and 100 are not there anymore, then Netflix does this upwards. It breaks moving average of 20 and 40 right when they're about to cross. As you can see, it breaks them upwards and goes from $413 to $434. That is a 20-point uptrend just from following the strategy. It broke the moving average of 20 and 40, and it went to the moving average of 200. 20 points. 20-point gain just following the strategy. Now, of course, you could have to contract and move to 444, but since we're following the strategy completely, went from 413 to 436. Incredible 20-point profit. Now, next stock, AMD. AMD, same strategy used. Broke the moving average of 20 and 40 downwards and went from $114 all the way down to $101. And as you can see, when it was going up, then it broke the moving average of 20 and 40 again downwards, where of course you buy a put, and it went from 107 to $100. 99. That is a 7-point deficit, a 7-point put. Now, it breaks the zone of the moving average of 20 and 40, as you can see, from 104, and it goes to 109. Now, as you can see, it still hasn't reached the moving average of 200. So what does this mean? It means it has a very good chance of still on Monday or on Tuesday, since this is Friday, can reach 112. This is not Friday, but the stock market closed on Friday, and this is what we're analyzing. Can reach the zone of 200 to 112. This is active. This is strategy being active. You can see it. Next stock, TZA. As you can see, absolute incredible profits. TZA broke the moving average of 20 and 40 upwards. And right here, you buy the call, of course. Went from $23 to 25.48. Right there in TZA, you could sell. That is an incredible amount of profits. Absolutely incredible. Now, it kept going. No zone though. So, what does it do? It breaks the zone of 20 and 40 and then right after it has a cross. It breaks the zone of 20 and 40 downwards, has a cross, you buy a put, and it goes all the way down to 24. All the way down. From nearly $28 to 24.78. Strategy works everywhere. Lastly, we'll analyze NVIDIA. NVIDIA, same strategy, broke downwards the moving average of 20 and 40 at a cross, and as you can see, it was already forming, so you could already guess the cross was coming. It broke the moving average of 20 and 40 after the cross, and it went all the way down from $465 to $433. That is a near 30-point deficit, which you could have capitalized completely knowing this strategy, and you will now. Now, NVIDIA breaks the moving average of 20 and 40 upwards now. Breaks it upwards. As you can see, breaks it upwards. It has a cross. You buy a call. It doesn't matter that it went down from 439 to 421. Doesn't matter. Because you bought it after and went up and it crossed. Now what does it do now? It keeps going. It goes from 439 all the way up to 495. This is how you analyze a stock using this strategy. Thank you.